Islamic social finance relies on two core instruments, zakat and waqf. These mechanisms move massive amounts of capital toward wealth preservation and social equity, fulfilling the core principles of maqasid al-Sharia. But that flow of capital frequently stalls. When organizations rely on manual verification to process claims and physical paperwork, the system creates administrative choke points. Capital remains stationary while beneficiaries wait for a human review. Traditional closed ledger accounting complicates the process further. Donors lose visibility the moment their funds are transferred, which results in documented mistrust and a lack of recurring contributions. For waqf, endowments meant to generate continuous returns, the absence of real-time data and predictive forecasting often leaves physical assets producing yields far below their market potential. Digital payment portals solve the point of entry, but the internal verification and routing still rely on the same manual processes, causing initial delays. Faster donation speeds cannot fix a broken internal architecture. As long as the core verification logic remains manual, the speed of the contribution will never translate to the speed of the relief. Solving this disconnect requires two distinct technological layers. A blockchain provides a mathematical guarantee of trust and execution, while artificial intelligence handles dynamic resource optimization. This flowchart maps the capital lifecycle. In the zakat track, donor transactions are recorded onto a decentralized blockchain ledger for a transparent record. In the waqf track, an AI module tracks asset income and forecasts future returns and maintenance. By integrating both tracks, the architecture enforces Sharia compliance at code level. It guarantees transparency while dynamically routing capital based on documented socio-economic data. To see how this works, consider a specific zakat transaction. A donor named Ali contributes 1,000 ringgit intended for immediate redistribution to marginalized communities. Under existing models, this money enters a general holding pool. It stays there until administrators can physically verify applicant circumstances and family needs. The proposed model shifts the sequence. The moment Ali submits his contribution, the transaction is cryptographically hashed onto an immutable ledger. The ledger generates a unique encrypted ID tag linked specifically to Ali's funds. This allows the donor to monitor the status of his contribution through each stage of the disbursement. Once recorded, the system begins the routing phase to match Ali's capital to the correct beneficiary. Instead of relying on a static waitlist, the AI module processes real-time variables across the population, calculating current income levels, family size, and geographic location. The AI dynamically ranks demographic data via this radar chart. It isolates the highest urgency node, a single mother in Kuala Lumpur's B40 bracket. Once targeted, the blockchain initiates execution. A smart contract connects the donor's ID to the recipient, triggering the transfer. Because the smart contract is self-executing code, the funds deploy the exact millisecond the algorithmic conditions are satisfied, removing the administrative wait time entirely. We already see this mechanism working. The World Food Programme's Building Blocks project uses biometric scans to verify identities on a blockchain, distributing aid to refugees without manual delays. Combining AI profiling with smart contract execution converts zakat from a slow bureaucratic exercise into a precision-targeted release mechanism. For waqf, the focus is on sustainability. Suppose a philanthropist named Fatima endows 50,000 ringgit to build a community healthcare clinic. Waqf mandates that the principal asset is preserved while generating continuous socioeconomic returns for the community. Without data-driven planning, these physical endowments often face high maintenance costs and low utilization, yielding less than their market value. To optimize Fatima's endowment, the system deploys an AI predictive analytics module specific to asset management. This line chart models the forecasted asset yield, calculating that an attached pharmacy generates 10,000 ringgit monthly after costs. The system then identifies optimal reinvestment nodes along the timeline, plotting a course for long-term appreciation of the clinic's resources. During the construction of the clinic, the blockchain layer functions as a strict escrow agent. Capital is locked in a smart contract. The system releases payments to contractors only when algorithmic verification of engineering milestones hits exactly 100%. Tying payments to unalterable logic reduces accounting errors and prevents the arbitrary payment delays that often stall capital development projects. Encoding these milestones ensures Sharia compliance and governance is maintained through the logic of the code itself, rather than constant human auditing. Predictive AI and milestone-based smart contracts convert static endowments into self-sustaining facilities capable of providing continuous medical care. Moving beyond these individual cases, we can measure the macro impact of this architectural shift across the sector. This chart compares processing times. Data from blockchain systems demonstrates that automated disbursements provide a 40 to 70% speed increase over manual processes. This also influences capital supply. Studies show verifiable ledgers drive a 20 to 50% increase in donor engagement. Furthermore, resource allocation shifts from ad hoc decisions to a process responding strictly to the highest documented need in the beneficiary population. The data suggests that this architecture addresses the structural root causes that traditionally lead to philanthropic stagnation. Malaysia's advanced digital infrastructure and National Waqf Blueprint provide the necessary environment to stress test this framework. The model is built to scale internationally, specifically targeting centralized governance models like those found in Brunei Darussalam. Expanding the network regionally involves aligning with Sharia regulatory bodies, upgrading infrastructure to 5G, and establishing standardized data protocols. Institutional support is essential for cross-border scaling. Partnerships with the Islamic Development Bank will facilitate the adoption of this framework across the ASEAN region. Because the architecture is modular, its deployment tracks directly with global sustainable development goals, including the reduction of poverty and inequality. Realigning Islamic social finance with its original mandate requires replacing administrative delays with a protocol routing capital to the most urgent needs by design.